UBC, inspiring Uganda.
Happy Valentine's Day! It feels great to reconnect with you, our esteemed viewers. Welcome to the Business Roundup. I'm your host, Maureen Babidie, and before we hit the ground running, these are some of the top stories. BRU assesses Uganda's money economy participation and what it takes to have everyone on board. Government is urged to scale back domestic borrowing. Uganda launches its Women in Nuclear chapter. And Tanzania cashes in on copper boom in the global market. Let's get started. In our first report, President Yoweri Museveni says 70% of Ugandans are now part of the money economy, a sharp rise from the just 9% at independence, attributing the shift to 4 decades of NRM-led structural transformation. But beyond the headline figure lies a deeper question. What does being in the money economy truly mean? And what must Uganda do next to turn participation into real asset and wealth creation at scale?
Now, 70% of the people are in the money economy now.
President Museveni traces Uganda's economic journey through 5 stages, from post-1986 recovery after years of collapse, rebuilding the productive base destroyed during the Idi Amin era, to diversification beyond subsistence agriculture, value addition of raw materials, and now the emergence of knowledge-based industries, including automotive assembly and ICT.
From the colonial times, at independence, the figure they gave me were 9% in the money economy. Now, when we came, still a small number of the people were in the money economy. The majority were outside the money economy.
He notes that the economy has sustained average growth of about 7%, with projections of double-digit expansion as oil production, industrial manufacturing, and regional trade deepen.
The money economy, investing in profitable ventures, having money for yourself. We are looking at a farmer maybe in the village who you have given a 1 million per PDM, that fund of PDM that they receive the 1 million. Ideally, the reason for giving them that 1 million is getting them into the money economy so that they can, you get involved in business and try to grow that money.
Government's economic empowerment programs like NADS, Intandikwa, youth livelihood programs, women entrepreneurship programs, Emyoga, and the parish development model have helped expand the money economy participation from 32% in 2013 to over 60% by 2019. This means that more households now earn incomes, use mobile money or banks, and buy goods and services rather than relying solely on barter or subsistence production. But economists caution that being in the money economy is not just about earning cash.
Now, in my estimate and view, I think that, for example, at the parish level, we could do some programming so that we know that there are so many people in the parish and they need food, and they need housing, and they need clothing. Is there a way we can program the parish so that everyone in the parish is accounted for in terms of employment, in terms of work, in terms of production, in terms of access to the goods and services that are being produced? So I think leaving it saying to the market, I think, in my opinion, is outdated.
Without strong productivity and market access, cash participation risks remaining low value, high effort survival work rather than wealth creation. This is where rural Uganda becomes a decisive frontier. While most empowerment programs target rural areas, production remains fragmented. Inputs are inconsistent, aggregation is weak, and value addition is limited. Unless rural households are connected to reliable markets, processing facilities, storage and financing, government's economic empowerment programs risk delivering short-term relief rather than long-term transformation.
So the government must be also clear on identifying the needs of specific households, specific regions. Is there need cash? The need might not be cash. The need might be a road, a bridge that somebody is not able maybe to transport their milk over the bridge. Otherwise, the cash might be redundant.
For Uganda to reach bigger heights in asset and wealth creation, experts argue that the next phase must focus on turning villages into production units, not just beneficiaries, linking farmers to regional and continental value chains, scaling agro-industry, mineral processing and manufacturing, and convincing the population to join the money markets.
Africa is 18% global population, but we are only 2.2% global GDP. So that means that there is a disconnect. And to me, that's the opportunity I see. If we focused on business and emphasized how do we become part of the global economy. And to me, we shouldn't be looking at government. These are things that I think now capital markets should feel in terms of this infrastructure. Imagine if Ugandans had raised money for Bujagali. Now imagine the wealth that we have created for Ugandans.
The 70% milestone signals real progress, but the final test lies ahead, whether Uganda can convert participation into productivity, income into assets, and national growth into continental relevance. Wadulo Arnold Mark for UBC.
Government has been urged to scale back domestic borrowing as a critical step toward lowering the cost of money and fostering sustainable social and economic development. According to the governor of the Bank of Uganda, Michael Otingiego, interest rates are likely to remain elevated for businesses and households if the government's appetite for borrowing from the domestic market remains unchecked. We have a report.
For many Ugandans, access to affordable credit remains a distant dream, from small business owners struggling to expand to families seeking loans for education or housing. The high cost of borrowing continues to bite. Professor Ndebesa Mwambutsia, a historian and political analyst, says Uganda urgently needs a recalibration of both its monetary and fiscal policies to steer the economy onto a more sustainable path. At the heart of his concern is the persistently high lending rate in commercial banks, a burden he partly attributes to government's heavy domestic borrowing, which competes with the private sector for available funds.
Less domestic borrowing. Domestic borrowing has caused us trouble, and that is why interests are high, partly, but also why the Bank of Uganda and the government of Uganda is competing with private investors because of this domestic borrowing that is insufficient.
Governor Michael Otingiego agrees that domestic borrowing exerts pressure on interest rates, crowding out private sector credit and making loans more expensive for ordinary Ugandans and entrepreneurs.
High fiscal deficit that is domestically financed. As you offer more instruments in the market, right, government is considered to be risk-free. They issue instruments that are risk-free. Now, let's assume that a one-year treasury bill is 14%. So, if you Dennis want to go and borrow money from a commercial bank, what rate do you think the commercial bank is going to charge you? It will decide, do I buy a government one-year treasury bill at 14% or give Dennis this money? And if I'm going to give Dennis this money, am I going to give him at 14? Maybe they will mark it up that you look risky, so say maybe you pay 18 or 17. But we believe that if government really says it's borrowing from the domestic money markets or from the domestic economy, then that 14%, which is considered risk-free for 1 year, will come down, right? Maybe to 10%, right? And then when you got there, They'll mark it up that for you are risky, still add another 3% points. So instead of paying 18, you begin paying what? 13.
So what is the way forward? The governor points to fiscal consolidation as a key solution. He also highlights the urgent need to clear outstanding arrears owed to suppliers and contractors, as well as unlocking more than 6 trillion shillings reportedly tied up in prolonged court processes.
Maybe these guys have borrowed money from the banking system and they haven't been paid. And then there are issues of some borrowers also when they borrow money and they perceive they can find a leeway, you don't want to pay, you run to the commercial court, you ask for a court injunction. Today, more than 6 trillion shillings is locked up in those commercial courts, right? So the sooner those cases are resolved, the better for the commercial banks.
The Deputy Governor, Professor Augustus Nwagaba, emphasizes a complementary approach, cultivating a stronger savings culture among Ugandans and deepening the financial markets to expand access to affordable credit.
We as Ugandans, we are very poor in saving. We have very high propensities, as you know, for consumption. Every money you earn, you want to consume it. So in the process, you will find, that's why we have to commend SACCOs. That's why we really have to congratulate these big SACCOs. EBO, we have Wazalendo, these are forced saving schemes. Those have helped us. If there were no SACCOs, this interest rate in the commercial banks would be toward almost 25%.
Professor Ndebesa likens Uganda's economy to a caterpillar struggling to transform into a butterfly, weighed down by structural bottlenecks, policy inconsistencies, and the high cost of capital.
I am not an economist, but you economists may have to think twice, and we see how to promote, transform from a caterpillar to a butterfly.
Until these constraints are addressed, analysts warn that businesses will continue to operate cautiously, investments may slow, and economic transformation could remain elusive. Dennis Igoa for UBC.
In a new development, women remain underrepresented in the nuclear field, particularly across the African continent, largely due to barriers to entry and persistent challenges throughout their careers. This concern was raised by participants at the regional meeting in Kampala, aimed at strengthening women's participation in nuclear science and technology.
The Women in Nuclear chapter in Uganda must grow.
Professional women of distinction from at least 22 African countries have converged in Kampala under one roof to deliberate on challenges, share experiences, and chart a way forward for increased female participation in nuclear science and technology.
The other key challenge that we see is the lack of mentorship and role models. And I'm glad there are several women here. A significant barrier to advancement has been, of course, the fact that as you move to higher positions of leadership, you will find less women.
According to Engineer Irene Batebe, the Permanent Secretary at the Ministry of Energy and Mineral Development, the commitment to promote women in the nuclear field is driven by the growing demand for qualified professionals, both women and men, to support Africa's development agenda. She notes that nuclear science plays a critical role in addressing key challenges across sectors such as energy, health, agriculture, and environmental protection.
So as part of our nuclear energy plan, of course, we are keen on aspects of human resource capacity development, and that's why we've partnered with Soroti University, and we are advancing a center for nuclear science and technology that will support us in training young Ugandans, including women, that will drive our nuclear ambitions.
Her views were echoed by Professor Mary Bowadu from Ghana, who underscored the importance of mentorship, capacity building, and sustained support for the girl child as key to breaking the glass ceiling in science-related careers.
So the need to encourage, get more women to join nuclear industry is very important, because women have a way of analyzing, viewing things, their objectives, perceptions are not exactly the same as the men. And so when it's only men attending to the issues of nuclear, it means that we will be losing the perceptions and then the contributions of women.
The fastest way is mentoring. You see, when you see me come to you and I tell you I'm a lady, I am working in this field, already you will want to look up to me. And then you want to know more about me. You want to follow my path. So we are going to do mentoring so much.
The International Atomic Energy Agency continues to organize platforms such as the Kampala meeting to enhance visibility, celebrate successful women in nuclear science, and inspire future generations through strong role models. Charlotte Amuge for UBC.
Low uptake of insurance among micro, small and medium enterprises continues to negatively affect overall insurance penetration in Uganda, according to Dr. Alhaji Kaduna B. Luwega, the Chief Executive Officer of the Insurance Regulatory Authority. Speaking during an engagement with the members of the Uganda Small Scale Industries Association, IRA officials urged SMEs to embrace insurance as a critical pillar for business sustainability and growth. Take a look.
See how insurance will help us.
The Insurance Regulatory Authority has engaged members of the Uganda Small Scale Industries Association in a sensitization drive aimed at equipping entrepreneurs with practical knowledge on how insurance can mitigate risk, support business continuity, and boost investor confidence amid operational and sustainability-related uncertainties.
It is therefore important that you must recognize insurance as a practical tool for business survival and indeed continuity. Yet, many small-scale industries have decided to remain uninsured or underinsured, which often limits the protection against the businesses which you strive to make sure that you put your efforts to.
Small and medium-scale enterprises account for the majority of businesses in Uganda and provide livelihoods to millions of people across the country. However, many SMEs still perceive insurance as a luxury meant for large corporations or developed economies, a mindset the regulator is actively challenging through targeted outreach and education.
For you need it much more than even the bigger ones. For them, they can afford maybe one production line got a problem. They can afford to do away with that line and use the other 9 production lines which are still working.
The first decision we want to take as SMEs is to say we insure our employees. Most of our employees actually are not insured in SMEs. Anything happens, we start finding out how do we handle, and yet we don't know. That will be very key, but also another thing is when we have accidents like fire, burglary and all that, we have nowhere to run to. So it has been something that we think has taken our attention to see how we can protect our businesses from such kind of accidents, and we shall take it as a primary attention.
The engagement is seen as timely and strategic, coming at a time when Uganda insurance penetration has stagnated at below 1% for more than a decade, with the regulator now intensifying efforts to reverse the trend. Dennis Igoa for UBC.
On the regional scene, soaring global copper prices driven by demand from electric vehicles, renewable energy and green technologies are boosting Tanzania's mining sector. The East African nation is positioning itself as an increasingly important supplier, with copper production and exports more than doubling in recent years amid record highs exceeding $13,000 per ton.
Global copper prices have climbed above $13,000 a ton, fueling renewed optimism in Tanzania's mining sector as the metal gains strategic importance in the global energy transition. Long overshadowed by gold, copper is now emerging as one of Tanzania's most promising mineral opportunities. Exports of copper to China, one of Tanzania's key trading partners, reached nearly $25 million in November of 2025 alone. With copper refining facilities now operating in the country's southwest and in the capital Dodoma, the government says value addition will be key to boosting export earnings.
In the past, a copper-bearing rock was just that, a rock. Today we can process it locally into copper cathodes, which adds value. Previously, this level of processing was not available inside the country. Our current goal is to go even further, producing copper rods and finished wires ready for use.
Authorities say about 13.7 million tons of copper deposits have been identified across Tanzania so far. Over the past 5 years, copper production has more than doubled, rising from just over 21,000 tons in 2020 to more than 44,000 tons by early last year. Analysts believe that if managed effectively, copper could help Tanzania diversify exports, attract new investment, create jobs, and integrate the country into global green energy supply chains at a critical moment. Tanzania's mining sector has long been dominated by gold, which accounts for around 90% of mineral exports, generating nearly $4.5 billion in revenue last year. To expand the sector's contribution, currently at just over 10% of GDP, the government is looking to diversify its mineral portfolio, with copper playing a central role in that strategy. Critics argue that despite growth in the mining sector, job creation for young Tanzanians remains limited. They say the industry relies heavily on capital-intensive operations that require specialized skills, leaving little room for unskilled local labor. The government, however, says it is working to change that.
A new program called Mining for a Better Tomorrow is designed to ensure people are allocated their own mining areas instead of trespassing on other claims. They will receive training in mining practices, mineral processing and mineral trading, enabling them to benefit directly from their God-given natural resources.
With rising investment and sustained global demand, Tanzania's copper output is projected to exceed 205,000 tons by 2030. The government hopes that increased revenue from copper will help usher in a new phase of economic growth, benefiting both the country and its people. Isaac Lukando, CGTN, Dar es Salaam.
Theft of copper. This has been really discussed to a greater length. One of the solutions is that we create a tripartite security body to look at these copper thefts so that we intensify on enforcement and identify areas where such activities are taking place. Actually, what the drivers and transport associations have reported in the meeting, including the owners of the cargo, that they are not willingly to send the drivers because of the risk of being abducted, being harassed. To an extent, those reports we have heard of drivers being killed. So really they are reporting that they are not interested in sending drivers because they are on the line to suffer such consequences, and they are not willing to send more of drivers unless all these challenges are resolved.
In our Sounds of Business, we take you to Mwanza, Tanzania, where we give you a bird's eye view of the recently commissioned marine vessel, New Mwanza. Take a look. is the Valentine weekend, and today being the first night, we hope all of you received a token of love in form of cash, flowers, and to our business community, we know that this is one of those days where a lot of business comes your way, and we're so happy for you and delighted. To our florists, be mindful of the Bank of Uganda's warning against folding our Uganda shilling note. Other than that, we thank you so much for watching to the very end. My name is Maureen Babidie. Happy Valentine weekend.
My question is, what is the difference between rental tax and income tax?